How do I start a $1,000 portfolio? A beginner's guide. Starting small can truly lead to wealth. Even $1,000 can be a big first move for beginner investors. You don't need lots of money to start investing. This guide will look at ways to invest with little money. You can spread your risks and slowly grow your wealth with just $1,000. We'll cover how to manage risks with small amounts and plan for your investments. You'll learn about simple investment strategies that might make money on their own. Understanding the power of starting small. Putting in little money early can make a big difference over time. This is because of how gains build on top of each other. So small amounts now can grow into a big group of assets later. Compounding returns in time in the market. Compounding is like earning interest on your earned interest. Say you put $200 every month for 10 years at 6% interest. You'll have spent $24,000 in total, but your investment will actually be worth $33,300. The extra $9 to $100 you made is thanks to compounding, overcoming the myth of needing large sums. Some beginners think they need a big pile of cash to start investing, but that's not true. You can start with as little as $1,000 thanks to ETFs and zero commission trades. Also, you can own expensive stocks by buying just a part of them. So, you can spread your money over many stocks. Start investing early, even with little money. You'll benefit a lot over time. Gradually putting money in can make a nice nest egg. By using low-cost options, you can break the myth of needing lots of money to start. Prioritize debt repayment and emergency fund. Before starting your $1,000 portfolio, focusing on paying down debt and setting up an emergency fund is key. High-interest debts like those from credit cards should be addressed first. Their interest can quickly eat into your investment returns. Getting rid of debt means earning more money straight away. It lessens your risks in managing your small portfolios. After clearing off high-interest debts, work on saving for an emergency fund. This fund should earn interest to protect you before jumping into more investments. Great budgeting for investments is a big deal when you've got only $1,000 to start with. Make debt payment and emergency savings your top priorities. This approach is the cornerstone for doing well with your money in the future. Invest in low-cost ETFs or index funds. Looking for advice on starting a $1,000 portfolio? Consider low-cost ETFs or index funds. They help diversify your investments and can bring in passive income. This makes them great for new investors. Diversification and passive management benefits. ETFs and index funds are like mixed baskets of stocks, bonds, or other assets. They instantly spread your risk with one buy. These funds follow big market indexes, which keeps their costs low. You don't have to watch them every day or trade actively. Choosing the right ETFs or index funds. So, how do you pick the best ETFs or index funds for your $1,000? Think about what you aim to achieve and how much risk you're comfortable with. If you want growth, look at funds following the S&P 500. For passive income, consider dividend ETFs, and for a stable mix, add in some bond ETFs. Utilize target date funds for automatic rebalancing. Looking for an easy, low-cost way to invest? Consider target date funds. They're great for starting a $1,000 portfolio. These funds manage themselves, adjusting what they invest in as you near retirement. Target date funds hold a mix of stocks, bonds, and more. This creates diversification. As you get closer to retiring, they change their focus. They switch from making more money to keeping what you have safe. Even though target date funds might cost a bit more than simple ETFs, they offer a lot. They give you passive income from small investments, and experts handle your money. You won't need to worry about how your money is being used. By choosing a target date fund that matches when you plan to retire, it makes investing simple. They offer a diversified portfolio managed by pros. All you need to do is pick one fund. Explore robo-advisors for personalized portfolios. Robo-advisors are great for tackling the question of how do I start a $1,000 portfolio. They use AI to create personalized investment plans at low-cost investments. Brands like Betterment, Acorns, and Asset Builder focus on investment strategies for beginners. This makes starting your investment journey much easier. AI-driven portfolio management. Robo-advisors are powered by advanced AI. They analyze your goals, risk level, and time frame. This information helps them build a diversified portfolio just for you. It ensures a smart mix of investments across different areas. Low fees and minimal investment amounts. Robo-advisors stand out for their low-cost investments. They charge small fees and don't ask for a huge starting amount. This means you can begin with as little as $1,000. They also handle automatic rebalancing, keeping your investments on track. This could lead to earning passive income from small investments in the long run. Consider low-risk debt instruments. Starting with a $1,000 portfolio and want to manage risk? Think about U.S. Treasury bonds and savings bonds. They're low cost and low risk. These options offer more safety than stock funds. They give you good profits too. Treasury bonds and savings bonds. U.S. Treasury bonds are super safe investments. They're issued by the government. This means they're safer than many other choices. Income from Treasury bonds skips state and local taxes. This makes them great for earning passive income. Savings bonds like Series EE and I bonds are also safe. The government backs them up, so they're a low-risk choice too. Modest returns with lower risk. Don't expect to make as much as stocks from debt investments. But they do cut your overall investment risk, and they help keep your $1,000 portfolio safer. Adding bonds can balance your risk. This mix lets you handle changes in the market. It helps you keep focused on your long-term money plans. Invest in individual stocks. Starting with a $1,000 portfolio, picking single stocks might seem like a bright idea. It comes with more risk, yet offers potentially larger gains. For example, in the past 10 years, putting small bits into companies like Meta, Apple, Netflix, and Alphabet could have boosted your starting cash by a lot. Higher risk, potential for higher returns. Choosing individual stocks means needing to handle more risk. This is especially true versus safer options like ETFs or index funds. But if you do your homework and find firms with strong future growth and backing, the rewards can be big. Fractional shares for diversification. To make the risk of picking single stocks and small investments better, think about fractional shares. This lets you buy tiny bits of pricey stocks, spreading out your money over several companies. Yet remember, managing risk in your small mix of stocks is key. It demands careful study and smart planning for when to get in and out. Open an investment account. To begin investing with How Do I Start a $1,000 Portfolio, you first need to open an account. For beginner investors, there are two main types to think about. These are a taxable brokerage account or a retirement account. Each one has its own benefits and best uses. Taxable brokerage accounts. A taxable brokerage account is good for those with goals outside of retirement. It lets you put your money in stocks, bonds, and mutual funds. One big plus is that you can take your money out anytime without extra fees. This makes it a fine option for both short and long-term goals. Retirement accounts, IRAs and 401ks. If saving for retirement is your aim, then think about a retirement account. For beginner investors, this might mean an individual retirement account, IRA. This is available to you if your job doesn't offer a retirement plan. But if your employer does offer a 401k with a match, it's a smart move to use it. Matching is like free money for your future. Whichever account route you go, the important thing is to start by having a clear investment strategy for beginners and staying disciplined. Your small investments can turn into something big. Patience is key as your money grows over time. Asset allocation and portfolio diversification. Investing is unique for everyone and depends on what you want and can risk. Starting with a $1,000 portfolio, finding the right level of risk versus reward is key. A well-diversified portfolio can lower the risk of losses and boost the chances of gains. Balancing risk and return. If you're saving for the long haul, like retirement, you can take more chances. This means putting more of your money into stocks. But for short-term savings, focusing on safer options is smarter. This includes bonds and cash. Rebalancing and monitoring your portfolio. Having a mix of investments such as stocks, bonds, and cash is crucial for safety. Yet it's an ongoing process. Market changes can alter your portfolio's balance. Regularly balancing your investments keeps your risk level and strategy on track. Watching your portfolio closely and adjusting it as necessary is vital for those new to investing. Advanced strategies, options, and forex trading. Stocks, bonds, and ETFs can boost a $1,000 portfolio. Yet some people choose advanced routes like options and forex trading. These methods may offer bigger benefits but come with more risk. High risk, high reward opportunities. Options contracts let you buy or sell a security at a set price in a time limit. This can be profitable, but it needs deep knowledge and understanding. Even with small investments, losses can be big. The forex market deals with trading global currencies. It operates 24/7 with lots of money moving. Yet it's highly volatile and uses leverage, requiring careful risk management for small portfolios. Importance of education and experience. Options and forex are for those well-versed, not newbies. Serious investors spend time learning. using fake accounts and crafting sound risk plans. They prepare well to avoid big blows to their funds. Learning often involves losing money at first. This highlights why a strong educational foundation is crucial before investing small amounts in risky strategies. Conclusion: you have many ways to invest, such as ETFs, individual stocks, bonds, and easy-to-use robo-advisors. With an initial $1,000, you can create a diversified portfolio that fits what you want and how much risk you're comfortable with. Paying off any high-interest debt first is smart. It stops you from spending extra money on interest. Starting to invest early and putting in small amounts is the key. This uses compounding returns to help grow your money over time. For beginners, consider low-cost investments like ETFs and index funds. They make it easy to spread out your money and make some money back passively. Robo-advisors like Betterment and Wealthfront make things even simpler. They offer custom investment strategies for a small fee. You can also look at buying individual stocks. Using fractional shares lets you have a varied portfolio without spending too much. No matter the way you choose, stick to a budget for your investments and savings. This is very important. By carefully deciding where your money goes, it can grow steadily. This also helps to lessen any risks. Making regular, even small contributions can lead to big wins over time. With persistence, dedication, and a sound investment strategy, your starting $1,000 can become a big savings for your future plans.